So joining us for this session, we've got Sonya Schofield, who's from Gain Credit. We've got Sherlock from CallMiner. And we've got Guy Statter, who's from Qualco. So maybe I'll just ask each of you guys, maybe just introduce yourself and talk a little bit about your company and your role. So,
no problem. Thanks, Chris. So CallMiner, it's a word that's been used quite a bit here this morning. We're a data company, ultimately. We provide conversation analytics. So the conversations, irrespective of channel, whether it be social media, whether it be audio, web chat, virtual assistant, email, those conversations that you have with your customers are data. They're unstructured data. And what we do very simply is we turn that unstructured data into structured data to give you actionable insight to improve your business, improve your customer experience, help with your operational costs and efficiencies. And so that's basically what we do, Chris.
Okay, fantastic. Guy.
Hi, I'm Guy Statter. I'm head of sales for UK and Ireland for Qualco Software. Many of you will know Qualco UK, which is our sister company, which is a very fast-growing panel management business. But myself and my colleague Chris, who is still on a call outside, we represent the software business, which is headquartered in Greece. But we do end-to-end collection software, we do analytics, we also have an ecosystem which includes various different digital services. Some of our partners are in the room here today, so that's my role.
Oh, fantastic. Sonya.
Thanks, Chris. So I'm Sonya Schofield. I'm head of the Vulnerable Consumer Strategy for Gain Credit. We are a digital brand. We've got two products, Drafty and Lend and Stream. Quite new to role, been there about 12 months. Previous to that, I've focused the last 12 years in this sector, in looking at vulnerability, started off at Barclaycard, worked at Argos, Sainsbury's. I've been quite privileged, to be honest with you, with the different experience in products and different demographics of vulnerability as well.
Okay, fantastic. So to start the discussion, we're going to talk a bit about, I suppose, what we've seen in the last sort of 12 months in terms of like the affordability space and the vulnerability space. And Sonya, I don't know if you want to maybe just take that first from a creditor point of view in terms of like what have you seen the impacts been on people over the recent history, but then also how you're sort of seeing it now in terms of how that sort of leads going forward as well.
I'm not really sure whether I'm best placed to answer this question, if I'm really honest, because we haven't really seen much of an impact with the type of customer that we have. So the demographic of our customer is quite young. Average age is 35, they're digital savvy. We have a lot of key workers. So we haven't seen the impact that maybe some of the other companies have seen in terms of how it's affected our collections. The number one vulnerability for us is lifestyle, so it has been job loss, but that hasn't really changed or increased, over the last 18 months.
Yeah, and so are you seeing that that's going to change going forward, or how would you prepare for that? Because I'm not sure if that's necessarily uncommon in terms of like what's happened over the last 12 or 18 months is, it has been more benign, as we talked about this morning, than maybe we expected. But what do you think is going to happen going forward?
I mean, we are expecting, a huge impact. So a lot of that government support has gone, by the side now. We've seen interest rates are going to increase. So things are going to be a lot more difficult. The cost of living is going up, so things are going to be a lot more difficult for customers. But at the same time, there's like a false sense of security. We're coming out of a pandemic, so things are starting to open up. We're starting to offer more credit. So I do think it'll be a very different story the next 18 months than what we've just seen over the last 18. Yeah.
Frank, do you have any views on that? Or?
Yeah, I mean, a couple of things really. During the pandemic, I think digital transformation programs, we heard a lot about digital and data this morning. Digital transformation programs were accelerated, but we see more and more, particularly in some of the sectors that we work in, energy would be a good example, digital vulnerability, that the consumers don't have either access or don't have the means or skills to be able to access the digital platforms. And they've been somewhat, I think, left behind in all of this rush to digital transformation. What are we doing about the people that can't do it? So that's sort of one area that we've seen. I think generally, we're all aware of the stats from the FCA or the Office of National Statistics, which will talk about, 3 million more people are vulnerable this year than last year, and financial vulnerability. But I just look at it more from the, what's going to happen next. If you look at things like, the changes in universal credit, the changes in, the energy bills went up 12% in October. They're going to go up probably at least the same in April. The cost of living is rising, and I see more and more. Many of our customers work in the sort of debt collection, debt purchase space, and debt that is non-consumer related debt, I think, is going to be a problem. I don't know how much of a problem, but I certainly think the ratio of consumer versus non-consumer debt for individuals is going to increase over the next 12 to 18 months.
Yeah, I suppose we were just chatting over lunch around even like the energy crisis, right? In terms of like, if those bills goes up, then that makes, puts further pressure on affordability. It needs to be baked in now, right?
Correct, yeah. And, there is, the whole issue about the energy prices and vulnerability can go hand in hand almost, Chris. Yeah, if you're an energy company, and I was talking to someone at lunchtime, that the vulnerability can be a matter of life or death there, within that space as well. If I'm on home dialysis, for example, I need to be on a priority services register. There need to be special things done for me before there's any discontinuity of supply. So it's a fast moving, but because we deal in multiple sectors, I can see different things, but the main theme I see is that switch from consumer to non-consumer debt.
Yeah. But it sounds like it's picking up speed. I mean, Guy, do you have sort of views on that in terms of, do we have obligations, particularly since we've gone through COVID? Do we have to think about new things that we haven't thought about before? Particularly giving, taking things into account, I suppose, giving people access to even things like affordable credit, if we look at the front end as well.
Yeah, so I was going to touch on affordability because obviously we haven't spoken about that yet. So trying to model for affordability for, a debt plan, or even for actual, writing a loan in the first place is so much more difficult than it was, because there is no historical insight for what we're going through. And so you have to have a way of working with data and looking at data as it is coming in as much real time as you can. But of course, what you can't look at is historically how someone acted or they behaved, because the level of uncertainty is so high. As we all just, there's the pandemic, but there's all these other factors as well. And there is the fact that affordability levels are going to shrink. We're not quite sure by how much, and trying to model that, whether it is, I say, in the granting of credit or is in the treating of debt, is very, very difficult. And that is something that we are working on, with a number of different partners, trying to get data from as many different places as we can, trying to build an ecosystem so that we understand the things that we can understand. And so the things that we can understand are things like how customers want to engage. So if we can have a dialogue with them on the channel of their choice, we can help them better. But what we might not be able to do is necessarily come up with the exact perfect payment plan for them, because we just don't have enough information. So
you think we have blind spots in our assessment of vulnerability or assessment of affordability today? And yes. Where do you think those are, and where are the big blind spots you think we've currently got that would really, really help?
Well, I suppose the blind spots are just the fact that there is so much uncertainty. Yeah. And every single individual, because of the pandemic and because of their individual life situations, needs almost an individual level strategy, because they may or may not be getting a pay rise, or they may or may not be about to be made redundant. They might be in a very vulnerable industry that may be subject to change in the future, but they may have changed their lifestyle so that actually they're catering for that. But they may not. They might be, as soon as the world's opened up, they might be about to drop 10 grand on a holiday they can't afford. So we already, as an organisation, try to work as much as possible on individual level strategies, but we have to all try and think in that way. And it's not the easiest thing to do. And there are still going to be blind spots, because we just don't know yet how bad a certain crisis is going to be, and how many companies are going to go bust. To Frank's point, we don't know yet how bad the commercial world is going to be. We're still seeing the tail of the government support, but that will end soon. And then all of those employees could be in a really difficult situation. And the example I've just given, they've just booked a 10 grand holiday, well, how's that going to work, So.
And Sonya, I know you sort of specialised this for many years now, I suppose, in terms of are there other places we can look at to get that information, to start to look at some of that information? I mean, we were talking about some of that a little bit earlier in terms of are there other techniques, other places we need to look to get that almost next level understanding?
Absolutely, and I think, the industry collects so much data on our customers, but I don't think we always look at it in the right way. So if you look at the different channels of communication that we've got, there's so much focus on how we identify vulnerability in the telephony channels. There's so much guidance out there. We all know what the indicators are. We all know how to draw that disclosure out, how to question customers, all the different models. But there isn't the same guidance out there or the best practice on anything else in the digital world. And there's so much data available to us. If you just look at acquisition, for example, we focus solely on affordability and the financial numbers, but what else can you see when you're looking at open banking, or if you've got access to credit card information or bank statements, bank accounts, sorry, you can see gambling transactions. How many companies are doing analysis around the volume of transactions, net spend versus gross spend, whether that's increasing month on month, and how that relays into your customer success rate. So I don't think that we're don't think that we're looking for those indicators in the same way as we would do with anything else. If you've got a customer coming back to you, with revolving credit, can you see the change in circumstances, marital status we've talked about before, or has somebody moved home, because that could be an indicator. So that there's things that we can see from a vulnerable point of view that could indicate that somebody needs help that we're just not looking for.
So it's not just the information, but then it's also how the information is then linked to other pieces of information and understanding that across the life cycle.
It's just looking at things in a proactive way. I think historically, as an industry, we've waited until a customer has told us that they're in a vulnerable situation, but we've got so many clues. The digital journeys, for example, there's indicators of how a customer moves around your system. How many times are they going back spaces? How many times are they hovering over FAQs? Or what's the idle times? There's indicators everywhere, but we're not always, looking at those in a proactive way.
Yeah.
Even chats. If you look at live chats, how do you identify vulnerability there? Well, first of all, let's stop having 5 conversations with different customers and just focus on that one customer and have a little, you can see whether somebody's typing something up, deleting it, typing. They're all indicators of vulnerability that you can just stop what you're doing and ask if everything's okay.
Yeah.
But we don't always look at that.
Yeah. And I suppose, Frank, from a technology point of view, I mean, how much is technology an enabler for that? And, what do we need to put in and what do we need to now think about to put that in?
So it's a bit of a safety net. I often think, when we look at vulnerability as a topic, that there's an obligation, a regulatory obligation on our customers to do the right thing in relation to detection of and action for vulnerable customers. But the people who are dealing with the frontline agents dealing with the customers, maybe they're trying to make a sale or trying to collect money, that they'll miss, and it happens that they miss the indicators, they miss the markers. And what I guess analytics does is it allows you to actually, detect if I said to you, Chris, sorry I didn't get back to you, Chris, I just got out of hospital. Where's my money, Frank? But the fact that I've just got out of hospital is in itself could be, in context of other language spoken within that interaction, an indication of vulnerability. So what we do effectively is to provide that overarching governance to ensure that where vulnerable circumstances have been identified on a call, it's been appropriately logged and flagged. And you can do that in real time as well. You can do that as the call's actually happening to provide a stimulus or to the agent to say, hey, vulnerable language detected, and guide, to provide a better agent experience and a better consumer experience. And you're doing this holistically, so you're not relying on sitting and listening to 1%, 2%, 3% of the calls. Let technology take that strain for you. Do it holistically, and you can do a comparison of those calls that were dispositioned as vulnerable versus those that were the language was vulnerable, and ensure that you've got the most appropriate holistic framework really to measure it.
I suppose there's almost like sounds like there's a consistency aspect there, but also almost like, does that link back to almost like transparency? So everyone's been treated almost like in a way that you can be transparent around the way the decisions or the way the monitoring was done?
Yeah, I mean, I have to say to people, software doesn't have its good days and its bad days. It doesn't have its favorites. It doesn't have a process that it prefers. Everything is being measured in the same way for every consumer and for every agent. Therefore, it is probably the fairest and most holistic way of doing this. And it's not, it's not there to be Big Brother. It's there to actually help our customers to get better outcomes.
Yeah, yeah. And Guy, I suppose when we look at customer journeys, we talk about, I suppose, automation. We're talking a bit about affordability, vulnerability. I mean, how much do we need to bed it into our process design that can be part of the systems and the software versus overlaying it on top? And what's your kind of view on that?
Yeah, I think you need to embed the freedom for individuals who are working with clients to use their initiative, but also to make sure that you're signposting as much as you can to make sure they are checking for as much as you can. But to Sonia's point, you're not going to catch, and to Frank's point as well, you're not going to catch everything for everybody. But so there is an element of training, and that is continuous training as the world changes and the types of vulnerability change and so on. So the software should help guide, but it should allow for that freedom for that individual. I think the point was made this morning, you're never going to take the individual out of the process, nor would you want to. But what the software and the technology should do is give as much information as you can find up front, which will hopefully then stimulate the conversation in the right way, and then hopefully allow for those questions to come out, to find out about coming out of hospital or a recent bereavement or whatever it might be. Because otherwise, if it's just a transactional relationship, then you're not going to pick up any of that. You're just going to ask for a payment or whatever you're trying to do, or you're going to try and categorize someone or send them to a debt charity or whatever you do, and you don't actually capture anything. And there's not a lot of value in doing that other than it's a transaction and you can tick it and say, I've done it, which isn't really what's required at all.
So there's that piece of like linking each of the elements together, isn't it?
Yeah, exactly. Yeah.
And the question's actually just coming in now around vulnerability, and is it labelled too general? Is it too general? And so even this session is called affordability and vulnerability, right? We're not talking about individual types of vulnerability, and some types of vulnerability can be different, right? And they have different responses, different things you have to do with it. I mean, are we being too simplistic just by calling it vulnerability, or is that a label we have to use, Sonya?
I mean, it's not a label that I've historically used. I think when I started out, we didn't call vulnerable customers vulnerable. They were just customers that had complex issues or complex needs. So I don't actually like that term, but I think that the place that we've got to, I think it's great that there's so much guidance out there, but I think when you focus a little bit too much on the cause rather than the effect of vulnerability, you just try and fix things and it becomes vulnerability bingo. Well, this customer's mentioned this, that means that they're vulnerable, instead of actually finding out what the effects are. I mean, we absolutely need to know what the indicators are so that we can investigate a little bit more. But I think, I hate the phrase vulnerability. It does feel a little bit like vulnerability bingo when you hear certain words.
So how do you think of that in terms of like thinking what the effects are? I mean, how do you think about that in terms of like how you're designing your processes?
So we've absolutely focused on the effects of vulnerability, and when you focus on the effects and the risk of detriment, you can start to change your strategies, get your systems to work for you a little bit more, and you're just improving the outcomes because you're not focusing. If you think about somebody who maybe has a bereavement, has gone through a bereavement, if you focus on that bereavement, there's a huge spectrum in there and everybody's different. So understand what's the impact of that. Does the customer just need a couple of weeks break? Does the customer need something else from you? And when you focus on what that customer needs, that's how you're going to improve your outcomes.
Yeah, just like thinking of it the other way around rather than we typically do.
Just to add to that, I think there's a real danger of making assumptions before you have all the information. So, somebody might be officially categorised as disabled, for example, but they may not see themselves in that way, and it may not affect their ability to pay you at all. You need to note that somewhere, but don't just assume that they've then got problems that are causing them not to be able to pay. But there is sometimes some organisations seem to have like this sort of assumptive approach to it, which is not really that helpful, in my opinion.
And how do you think that gels? Just we were talking a little bit this morning, one of the sessions this morning around the regulatory approach and the customer duty approach. I mean, how do we think about that, the linkage between doing the right thing and being outcomes focused and doing that versus then obviously meeting the regulatory requirements, as they're written? I mean, how do we sort of reconcile those?
Well, I guess from a software perspective, how we look at it is we think of the regulations as the kind of framework within which we have to work, and then the sort of individual strategies and approaches operate within that. So if something doesn't fit within those regulatory guidelines, then it shouldn't really be in the strategy, if you like. But obviously, that's making the assumptions that all regulations make sense and are not contradictory, which of course is not always the case. So that's why we have compliance people to help us go through that sort of that assessment, really. But yeah, that's how we would generally approach it. And we work across Europe, and so we deal with different regulators and different approaches. But we always start with, right, okay, what are we told we have to do? And then within those guidelines, what can we actually do to maximise?
Use the other approach. Use the other approach. Frank, any views on that from a?
No, I mean, much the same as what Guy said. I mean, whether you like it or not, the regulations are there. If you can get technology solutions to help you better manage both the detection of and the appropriate response to vulnerability, you're covering your regulatory obligations. A lot of what we do is also, that's not just the detection of vulnerability and did you take the appropriate action. Certain agents will require certain focused training. They're good at some bits of it, but not as good at other bits in terms of dealing with it. So, providing very targeted and focused feedback to the agent rather than just sort of, hey, here's the group training course on vulnerability and everyone needs to do this. There'll be certain strengths and weaknesses that individuals have that we can help highlight as well.
Yeah. So a question that came in one of the earlier sessions, just before we move off this topic, was around QA and around QA, particularly in omni-channel or in completely digital processes, and we were talking about that. Any thoughts on that? I mean, particularly, I suppose, the omni-channel piece, where you've got multiple channels going on at the same time, might be text, might be voice as well.
I've got many thoughts around QA. I think that in any walk of life, how organizations are supposed to make decisions based on, 1, 2, 3, or 4% of the data that's actually available to them to make those decisions. But still today, we see many organizations that will manually assess, listen, aggregate, and provide feedback to the business around, you just can't scale. You can't scale on telephone calls. It's 3 times as long to sit, listen, score, and aggregate a call as the call itself. So I absolutely think that on the general topic of quality assurance, technology has a big part to play. Then there's the other side of it, Chris, to say, well, believe it or not, I mean, people always laugh when I say this. Well, hopefully you guys are going to laugh. But one of the first things some of our customers say to us when we first engage with them is, we need analytics to tell us why people are contacting us. They don't know what the call drivers are, and what we've seen a lot of in the move to digital transformation is, why did someone who had a web chat or a chat bot or a virtual assistant communication with us this morning, why have they rung us this afternoon? What went wrong? What was the root cause of these broken journeys? How often are they happening? So it's a bit of the omni-channel side. If you can analyze all of your channels under a single umbrella, it makes it a lot easier, I think, to do that journey management. And if you're still doing manual quality assurance for whether it be affordability, compliance, or vulnerability or any other issue, I think it's time to maybe have a think about there are better ways of doing this.
Yeah. And so you talked about, we talked about more technology, more systems being put in place. I suppose one of the things we've seen a lot of technical innovation going on recently, but with all these new technologies we've been putting into our processes, is there a danger, do you think, that we're going to build a patchwork of systems that don't talk to each other? So we have different systems doing different things, and they don't necessarily connect with each other or interlink with each other.
Yeah, I mean, we look at this sort of silos of different. So if you're analysing your web chats, for example, in a different channel than you're doing your audio, and never the two shall meet, that's a problem. But more holistically than that, are you able to inform your CRM system? Are you able to auto disposition? Are you able to use APIs to provide the data into your data warehouse, into your predictive modeling. So I do think that this data, as I said, we're a data company, but unless that data is joined up with other data sources or other systems that are used to run the business, there's a danger. There's a danger. It's just data.
Yeah.
You just use more data, so you do absolutely have to be able to join it up.
Yeah, I suppose we talked about data sharing between companies, but there's also data sharing between technologies inside the company, right, as well. I mean, Guy, what's your kind of view on that? Nodding?
So I'd probably challenge your statement about patchwork, Chris, because there are technologies, and we're one of a number of companies that deliberately create an ecosystem that is deliberately from different organisations doing the things that they're good at, and all of the data of all of the things they do, we can pull into one place and get insight from it, and then add on top of that third-party data, such as open banking or any number of other types of data. So the technology exists there. Obviously, being able to use APIs to pull it all in is all there. But I think the final piece in the jigsaw is having people in the team who know what to do with it and how to get good, actionable insight from it, because not everybody is able to do that. And so the hardest part of actually some of the stuff that we're doing is getting all the departments within an organisation to agree what they want collectively and individually, and then use the data and the technology to get it for them. And we have a project at the moment where most of our workshops are internal squabbles about what people want and don't want, and that's the hard bit, not the actual technology.
Yeah.
And the way of solving that, of course, is to have good project governance and good decision-making processes and so on and so forth. But, the tech itself, I think the industry has got it solved.
So even though you try and become technically focused, that comes back to the human, which is the internal dynamics in terms of getting things done.
Yeah, I'd say, from us as a technology provider, what we can't do is tell our clients what to do. All we can do is say, here are these tools, what do you want to do with it? Because it's not our job to set their strategy. And therefore those workshops become much more about that, which is slightly frustrating, but it is part of the job.
and I suppose looking at Sonya yourself, I mean, as an end user of the data, I mean, you either need the data or you need the processes to get good customer outcomes. What do you need? What do you need from these technologies? I mean, what's the thing that you're really looking for that's going to make the difference?
I think the way I would answer this now is probably different to how I would answer it when I work for some of the other companies. I've got the luxury of working for a smaller company where I can just extract anything that I want right now. I think, some companies, some retail banks, for example, might find it a little bit more difficult to extract what they need. For me, the important part from a vulnerable customer point of view is to absolutely know your target market, your customer base, what those vulnerabilities are that are prevalent, and then to overlay that in your customer journey and ask the questions then. So, if I know, the product that I have at the moment will naturally have a higher number of customers that may have gambling issues. So the questions that I would want to ask would be focused around that. And that's all I can ask of the data, is to look at what type of vulnerabilities I've got in my portfolio and tell me where I can find them in a proactive way.
Yeah. So I suppose you're saying is you want to get access to the information, and you can get access to it quicker now than you could have done before, which
Absolutely.
Then allows you to then make the decision.
I'm quite spoiled with the data at the moment.
Yeah. So what about external data? And we talked again a bit about data sharing and those kind of things. I mean, is there external data that can be used? I mean, there's some like data sharing services that are out there. I think before you talked about the credit bureaus as well. I mean, how much are we making enough use of external data?
So for me, there are some companies that will share data out there. I think the difficulty that we have is that we can't see what's underneath that data. If I was to look at my target market and look at the types of data that I can get from the companies that are sharing data, all of my customers will be vulnerable. So it sort of defeats the object a little bit. However, there are things that we can look for externally. I think most companies now in the industry do really well in their pre-delinquency state, where they're looking for financial information internally and externally. But what external information are we looking for from a vulnerable customer point of view? It's not something that we historically do. And if you look at acquisition, for example, how many of us are checking the notice of correction in somebody's credit file for vulnerabilities? Not very many companies do that. We might look at it from a fraud point of view, but you've got information there for power of attorneys, court of protections. You've got fraud information that's readily available to us. Are we looking at that from a vulnerable customer point of view? There's a lot out there.
There's like an extra level of detail, even the data we currently do have.
Yeah.
So it's sitting below.
It's just about thinking about things in a slightly different way. I think historically we've been so focused on transactional financial information, but within that there's other things that we can look at.
Yeah. And I suppose, how do you balance, there's another question here, which is talking about, true vulnerability and putting profit first versus not. And I suppose there's a balance there in terms of like when you ask for the money versus not. And what's your kind of guidance around that, particularly when you're thinking about outcomes?
So I think there's a cost benefit to identifying vulnerability in a proactive way before things become, before they escalate and things a little bit too late. So if you're focusing on looking for vulnerability at acquisition stage, it's not going to be a big problem then by the time it gets to collections. Vulnerability doesn't just happen in collections. We might hear about it by then because it's usually the reason why somebody's fallen into collections or the finances have usually exacerbated it. But the vulnerable situations don't just happen there. So the earlier that you can detect them, the quicker that you can respond, and I don't see it as being costly by doing it in that way.
Yeah.
Just to add to that, I think we talk a lot about digital engagement, but a number of organisations that we work with, once the customer is onboarded and until they hit collections, there isn't really much that people are doing in the digital space. There's a digital service available to check your balance or whatever. Some organisations are getting better at this, but they're not really providing engaging content, which means that the customer is engaging on a regular basis, and therefore you're not necessarily able to pick up potential signs of vulnerability. Whereas if you had good content about, how to deal with a particular situation, maybe unemployment or whatever, and they knew it was there, and they knew that there's 20 other different scenarios, they would use it as a source of information. And by looking and analysing where they're going, what they're doing, it probably can start a dialogue, and then you can understand why they're looking at it and so on and so forth. But that sort of activity from a digital engagement perspective, I think, is very limited in the market at the moment.
And how much of a responsibility do we have, almost like in the collection space and the credit risk space, to push that stuff upstream? Because in a lot of places it does kind of sit. A lot of it sits in the collection space.
Yeah.
Right? It kind of sits there, and you wait for it to happen, and then you do it on the back foot. How much do you think we can push it upstream, and how do we go about doing that?
We have a client at the moment, and we had that conversation with them very recently. And as soon as we said, well, you have these stories, they're sort of debtor stories, but why are they only sitting in the debt portal? And the answer was, actually, we're not sure. So we are going to potentially move those stories with them just into the general customer portal area as well. Alongside things like how to get further balances and positive things, because actually you should just have as much engagement as you can with your customers, particularly digital, because it doesn't cost you anything. So get them as much information as you can and then analyse what they're doing, and then you get insights that you can use for a number of things, but obviously identifying vulnerability is one of them.
It's almost like a sticky journey pre-collections.
Yeah,
I
absolutely.
mean, Frank, what's your kind of view around sort of, you get to see some of the stuff upstream as well, I imagine, as well. I mean, how do we create that dynamic, and how do we sort of make sure the information flows across the life cycle in a way?
It's not easy, is my honest answer. We do. I mean, our customers, we're not specialists in collections. We can be involved in the initial sale or onboarding, or so. And there is information generated during the customer's life cycle with you that could be useful in other parts of the organisation. A little story, I guess. One of our customers is in insurance, car insurance, yeah, and they also offer breakdown assistance, and they had a young lady, disabled, drives an automatic car with a small child, and the car breaks down at midnight in the middle of nowhere, and that's a lot of data. And they send a recovery truck with a manual car. yeah, and no child seat. I mean, there are just things there that you can capture. But it's hard, Chris. I mean, I couldn't give you a trite answer. It's it's simple. Just use all that information that you've got at customer acquisition, in customer service, to feed forward into collections. Yeah. But the information is there, but organisations find it hard.
But it does seem like it comes back to some of the stuff we were talking about this morning, which is how do you take a situation, analyse it, look at the root cause, and then sort of feed that back. But it includes, I think what you're saying is it includes upstream as well as not just the collections root cause. Yeah. So what about sorry, one question. Caught me off guard there. So digital. We talked all about digital. I mean, do you think there's a lot of been talk about digital, 100% digital? I mean, do you think we can ever get rid of the human at all, or do you think we're always going to have it? And Sonya, you've got your mic up.
I think there's been a lot of discussion this morning around human versus digital, and I don't think it should ever be one or the other. You should have both, but you should have the quality level should be the same for both. I think, and I mentioned this before, historically, having a conversation with a customer is fantastic for those customers who want to talk to you. But if you think of some of the really vulnerable situations that you might have where someone's really emotional, they may have gone through bereavement, do they really want to pick up the phone and talk to you? Probably not. Can they get the words out to tell you what's wrong? Probably not. So for them, the digital journey is absolutely key. However, that's only going to help if you've actually invested the time and thought about how that digital journey is going to be for them. When you're designing these journeys, are you testing them with different personas with multiple complexities, people with accessibility limitations, or people that have got multiple products with you, or people that have got some other issues? I think that's the way forward. I don't think it should be one or the other. I think you need to just have both of them designed in a way that will suit your customers. Yeah.
Frank, you look like you wanted to jump in.
I mean, I absolutely agree with Sonya. It has to be the channel most appropriate. We mentioned about digital vulnerability earlier, but I've been around the industry a long time, as you can tell, and I've yet to see the chat bot or the virtual assistant that can handle really complex issues. I think you always need a human. I've yet to see the chatbot that can provide the right sentiment and emotion and empathy and other skills that are required. So, I think that those who say it's digital only, it has to be digital, that's the way forward. Digital doesn't cost any money. It does. It's not possible for everything to be digital, and it will cost you customers if you just think, well, it's digital only. So.
The key thing that we focus on is consistency of approach across those different channels. So if you can offer something to somebody via the call centre, you should be able to offer it through self-service or through two-way messaging if those are the channels that you're using. And so as a provider, the way that we write strategies is with the basis that has to happen in that way. Because if you don't, and the customer breaks the digital journey because, I don't know, they went under a tunnel on the train and then they try and call back in, and you're then offering them something different, that is a terrible customer journey. So that consistency is absolutely crucial. And I think quite often we come across organisations that have tried digital, but their digital journeys are different to the contact centre journey, and that, to me, kind of isn't the best approach at all. So.
Yeah. What about once you've identified a potentially vulnerable customer, and other technologies that can be involved to sort of help that journey going forward? So we talked a lot about identification, but there's also once you're actually then identified as potentially being that. I mean, are there technologies you think that can help going forward in that customer journey and the experience once someone's actually flagged as being vulnerable?
So there's two ways to approach that, I suppose. One is, how can you help them within your own organisation, and what tools do you have at your own disposal to do that? Or it might even be identifying an individual who is most suited to working with them because they're an expert in, I don't know, serious mortgage debt with emotional strain or something like that. So there's that side of things. And then the other side is, can we signpost people to get better help more? And this is a real growth area for the sector. And there are some really cool organisations that are basically helping people access health issues locally, or food banks locally, or one of a myriad of other things, traditionally within the transactional area of collections and collection software, we might have a piece on a page that says, here's step change, or here's citizens' advice, and we'll leave it there. But actually, we could do so much more than that. And I think that's the next evolution around how we treat vulnerability, is actually we give people better help. We're not responsible for them per se, but we have access to that information. So why not tell them, actually, guys, there's a potential grant that you could get in your area, it's Leeds City Council, this, that, and the other, have a look at that, or whatever it might be, at that kind of level, And those organisations are coming to the fore now, so we all just kind of need to collaborate on that a bit more.
What about the link between, so we talked a lot about vulnerability, and we do have affordability up there, and I don't want to go into open banking yet, because that's the next session, so I've sort of been avoiding it. But what about the linkage between, I suppose, affordability, financial difficulty, and vulnerability? I mean, we talked about earlier, it's kind of, they're linked, right? So they are linked. And just to your point there around, getting people help, I mean, does it become another moment of truth to then become sticky relationships in the longer term for businesses? Frank, you want to?
So just going a little bit back to what Guy said, and then I'll look at the sort of affordability, because I think it'll give you a context. All these organisations here today, you've all invested a lot in training and tools and processes, etc., to deal with vulnerable customers, and you want to do it consistently, and you want to do it efficiently. So the ability to be able to provide information to the agent desktop in real time based on triggers of vulnerability, providing the appropriate and push it, provides for a more efficient and a more consistent experience. So when you apply the same sort of real-time technology to affordability and say, okay, we've got to do the priority bill check, the council tax, the mortgage, etc. Did we cover them? Then we can move on to the household expenditure. And perhaps they didn't cover all of the priority services bills. So when we detect that they're now onto the household bills, we can send a trigger reminder and say, hey, you didn't cover the council tax, or you didn't cover the mortgage, etc. So I think technology helps in that way to ensure, the way I look at it, a consistent and efficient response to vulnerability, and to ensure that your affordability checks are also done in a consistent manner.
Yeah. Well, what about the upfront, I suppose, like a credit adjudication, affordability in the upfront? So we talk quite a lot about the back end vulnerability, affordability, I suppose, in the collections process, but also the front end affordability as well. We don't necessarily have that sticky relationship as well. What can be done there? I mean, even from a speech point of view, I mean, are there things being done from that initial interaction to look at affordability on the underwriting process, or as well as vulnerability? Or is it external data? Really, it's external. That's the opportunity for external data.
So we can look at external data that we just see as additional metadata over and above what may be there within the interaction itself, and use that metadata to guide the conversation. I.e., one of our banking customers, they do a lot of the affordability checks done on a web form. But sometimes they're inconsistent, or there is stuff missing that the consumer hasn't put in. When they call the consumer, we provide the guidance to them to say, make sure on this call you only need to cover this, and you need to cover this. But then we'll also check were them two topics that they're supposed to cover appropriately covered, and was there an appropriate closure of that discussion. So
it's the drill down on maybe whether there's uncertainty from a risk point of view in terms of getting more information.
Yeah, it's like the topic of the day is about using data.
Yeah. Guy, any views on that?
No, I pretty much agree with what Frank said. I think from a design perspective, you can try and make it as easy for customers, and you can do it in batches. So we're involved in a mortgage startup at the moment, and they're trying to design the most efficient way to weed out the people that aren't that serious, but also to get to the key questions around whether they're likely to actually lend to that person in the right way through the digital channel. And then, of course, make sure they're monitoring all that all the time, and therefore if something's not working, they change the order or they change the questions, etc., etc. But yeah, to Frank's point, there's also then that making sure you're able to use technology to make sure if anything that's been missed or is inconsistent can get readdressed. So I think there's a customer experience angle which the better you make the journey, the less dropouts you're going to have. But actually, perhaps part of the journey is to check if people are serious about what they're doing. And also, if you can spot that there's a problem with affordability, or indeed any other thing that means you're not going to lend to them, find it quickly, send them the no answer, if you like, and don't waste your or their time. And equally, if it's positive, try and move through it as quickly and as effectively as you can without rekeying, without necessarily having to change channel, et cetera, which is the goal everybody is trying to get to. But particularly at the mortgage journey, it's a long and complex journey, so you're never going to get it perfect. But if you learn about where the dropout points are, then you will hopefully alleviate some of the worst of those. Yeah.
But where does the role of customer trust come into this? And look at you, Sonya, maybe on this, is like, you think of it almost a bit like, so I was using the analogy around, like, if you go to the doctor and they say to you things like, well, how many takeaways do you have every week? And you sort of say, well, I don't have any at all. And in reality, is you have one every Friday night, sort of thing. So, but once you told them if you've got health issues, then you're in that safe place with them, actually talking with them, and it feels good. But before you go in, you sort of feel a little bit nervous around it. I mean, so there's that almost like trust element even in the collections process. Where does that fit in? And how do you get customers who might be hesitating, saying that they've got issues with affordability, saying they've got issues with vulnerability? How do you get them to sort of open up and provide some of that data, in as much as, using the data to say, you might be vulnerable?
So I think if I think back to my days at Barclaycard, we had this scenario where we'd set up a fantastic vulnerable team in our collections department. And for the customers that went through that team, they had a really great journey. But what we found is that, for the proportion that went through it and got that journey, we had a bigger proportion that never went to that team because they didn't disclose the vulnerability to us or, any of the additional issues. So we spent a lot of time interviewing these customers. We did a lot of analysis, and what we found is that it comes to the trust part, but not just the trust, but what's in it for me? Why should I share this with you? What am I going to get out of it? So, and based on that, we developed the Money Worries Hub. A lot of customers, part of it is trust. Why should I share that I've got a mental health condition with you? But also, what are the benefits to that? So we spent a lot of time developing that site, showing people why it's good to disclose this information and what the benefits are, not just with the different vulnerability types, but the wider, job loss and things like that. And we found that really helpful. It's just to show people why it's beneficial. I think someone was talking this morning about there's customers that we're seeing in vulnerable situations now that have never been in this situation before. If you've had a customer who has been in a vulnerable situation and got some really good support off one of the other creditors, they're going to be more likely to open up to you because they know what the benefit is. If you've got a customer who's never been in this situation before, don't know what the benefits are to disclosing this, that's a little bit more difficult. So it's about showing people why it's good to talk and why it's good to disclose this.
So in the next session in open banking, we'll definitely, the phrase value exchange will be mentioned. So we will definitely talk about that. But it's really value exchange for vulnerability, isn't it? So what's the value in doing that?
Yeah. And if you think about it, some of these situations are really personal. Why should I tell you that, I'm going through a divorce, or why should I tell you that I've just lost somebody? What's in it for me? So it's about showing people why.
And how do we take that same concept on affordability? So we've got vulnerability, we talk about that, but then also the same is true on affordability. And there's always a difference in terms of what people disclose in the mortgage application process versus the mortgage arrears process, as an example, in terms of what their income might be, what their expenditures might be. I mean, is there something similar we can take learnings from that into the credit process and the collections process? Guy, do you got any thoughts on that one?
Yeah, I mean, I guess it's comes back to trust, I guess, but also I think just generally the industry hasn't got the greatest image, so somehow collectively, the collections industry has an image that those of us inside of it know that the image that most of the outside world has is completely the opposite of how it is. And actually, but I also think the lending industry also has a bit of an image problem as well. And so most people who want to apply for credit try to put down what they think the lender wants to hear rather than the truth. And somehow we need to educate that actually we need to know the truth. And hey, do you know what? There's probably enough data out there. We can probably find it out if we want to, but we'd really rather it came from you because that's the best source of the truth. If you sort of said, we know all this already, we'll talk about this in open banking, but people aren't probably comfortable with that. But there is still a kind of concept of what do I need to put to get this, Do
you think the disclosure, non-disclosure should influence credit risk decisioning? I'll go back to the previous session, but...
There was, again,
rhetorical question, maybe.
But my opinion on this is someone said at one of the earlier sessions that education at a very early stage about debt and the consequences of debt and what taking out loans mean and what affordable. I just don't think there's enough. I know from my own daughter that she could have done with some education from me or her mother before she got to 21 and started spending loads of money and not understanding what the consequences are. But seriously, I think there isn't enough education in my view.
Yeah. So we're almost at time. I suppose the last question I wanted to ask was coming back to the situation today. What are you expecting the outlook to look like for the next, 12 or 18 months? And we talked a bit about the pandemic this morning. It's hard not to talk about it. But then where are we today and what are we expecting either in terms of, affordability issues, but also vulnerability issues over the next sort of 12, 18 months?
So I think just to add on to what I said earlier on, we haven't seen much of a difference over the last 18 months, but I do expect that to change. The cost of living's gone up. The government have reduced the support for people and things like that. I think things are going to get really difficult quite quickly. There's a misconception that we're coming out of this pandemic and everything's going to be okay. But it's not. It's about to get really, really difficult for people. So I do think that we're going to see an increase in vulnerability with mental health conditions as well as the financial side as well.
Yeah. Mental health conditions also in terms of just stress people who've been under working remotely as well. That's come up too. Yeah. And what about timelines in terms of that, expecting that to flow through? What's your sense on that?
I think probably after Christmas is when the reality will start to hit people. Yeah. The run up to Christmas, people are in that little bubble getting excited for Christmas, and it's only when it gets to January, February that bursts. Yeah. So I think that's when we'll probably start seeing it.
Yeah. Dark days of January. Oh dear.
You naturally have a spike in vulnerable situations anyway in January, and I just think that might be bigger for us this year.
Yeah. And Guy, what's your view on the next sort of 12, 18 months?
Yeah, so I pretty much echo what Sonia's saying. The hope that I have is that from an economic perspective, that the mass job losses, etc., that we're expecting because certain organisations without the government support are going to go under, I'm hoping that there'll be some sort of process of people changing careers and changing jobs. And so providing that the industry is able to support that transition, it won't be that we have tranches and tranches of individuals who have got a whole new set of circumstances that, perhaps they were in middle management in a perfectly good company and now maybe earning, £50,000, £60,000 a year, and all of a sudden now they're unemployed. I'm hoping that the economy will recover or things will change so that their issues are temporary, but there is no guarantees of that. And so, that's kind of what I'm hoping for as a positive, but, the negative is I still think we haven't seen the full effects of all of the changes. We haven't used the B word. I didn't make the first half of this. We haven't used the B word yet at all today, so I'm going to use it. I don't think we've seen the full effects of Brexit either. And again, back to my point about uncertainty, there's just going to be more of it, unfortunately. So I say there is one little bit of hope around economic change and circumstance, but other than that, I'm not particularly optimistic, unfortunately. Yeah.
We have been forecasting, increasing arrears volumes. I've been doing it myself. For every 3 months is going to be in 3 months' time. Are we in danger of doing that again, or this time it's really it?
I think it's hard to say, and I'm not an economist as such, but some of the signs in terms of rental as a percentage of disposable income, the energy bills we mentioned earlier, the universal credit changes, the cost of living and food, all of these things are not necessarily good signs, but I don't know whether Sonya could well be right after Christmas. Guy, you might be right at 6 months. Could be 12 months, but it doesn't look like it's going to get better anytime soon with some of the economic factors that we face today. Yeah. But one thing though, Chris, that you didn't tell me, as I was talking to my fellow panelists, I fear for the next 4 months because both Guy and I are Everton fans. And Sonia's a Liverpool fan, and so she doesn't have to fear anything. And we have to fear
you can't mention that in Manchester. So, yeah, very good. Well, thanks very much, everyone, for joining. All three of you for joining. So yeah, clearly some great insights, asked some difficult questions, and so I think we got some real insights. So thank you. Just a round of applause, and thank you very much. Thank you.